Hello. Today we have Rakhi Prasad with 21 years of investment experience. Rakhi is a powerhouse out of India, where she managed a long-only equity portfolio, fundamentally driven, focused on India. She's a fund manager at Alder Capital, which is an investment manager that serves high net worth individuals, families, and private foundations, and also advises on a global fund with marquee institutional investors and family offices from New York, Singapore, and Dubai. Rakhi's background spans asset management, investment banking, private equity, and risk management. She's worked with leading institutions in the US and India, from Matrix Partners India to Enam Securities to Goldman Sachs. Rakhi has been honored as India's top 100 women in finance of 2020 by AIWMI, and their global fund was awarded Asia's best long-only fund in 2016. Rakhi earned a BA in economics with honors from Lady Sri Ram College, a BS in computer science from University of Michigan, and an MS in financial engineering from Columbia University. So we're really excited to have her today. Alder's team includes managers voted by the Wall Street Journal as India's top analysts for home and personal care sectors, and who received various awards from Reuters Starmine for the consumer staples category. Rakhi, one of the things I love when I was reading through your materials is how you set the stage in a piece that you shared with me. India is home to 1/5 of the world's citizens below the age of 20 years and has the second largest internet user base in the world. And the country is undergoing a radical shift in how consumers shop, pay, and live. So basically, you're missing the mark if you're not following you, Rakhi, and researching investing in India. So viewers would love to get your view on the B2C cycle that played out over the last few years, and how you see consumer subsegments performing going forward. So maybe you could share a little bit with us.
Thanks so much for that very kind introduction. I'm very honored to be speaking to you today, a stalwart yourself. So this is a pleasure from my side. Yes, I think we're a young population aspiring to consume a lot of goods and services. We're in a growing economy with income levels growing. So as an investor, we're very excited about the opportunities we see in the B2C space. Just because India is going through this economic transformation, which is a lot of goods and services are seeing this J curve in uptick in terms of consumption. So I think COVID obviously halted some of that consumption-oriented growth. Over the next decade, though, which is why we are so excited about the opportunities in this space, India will probably become the third largest consumption economy in the world, right after China and the US. So clearly there is opportunities to seek and to deep dive to understand where businesses are and where to see that. As I mentioned, that COVID halted some of that progress. But now with COVID behind us, hopefully the healthcare crisis is over. We're geared towards all these exciting businesses to look forward to.
So maybe you want to delve a little bit into one of the subsectors. I know that you've talked before about grocery retailing, packaged food and services, digital payments, unsecured retail lending, healthcare, domestic tourism, also lending, and the automotive cycle. So is there something in there that you'd say, gosh, I particularly am most interested in following and investing in the coming year or years that you could share with people?
Yeah, I mean, we did this whole analysis of consumer shifts and trends that we're seeing over the next few years and across all the sectors that you were talking about. But I believe that the biggest story of this decade will actually see, at least in the listed space, a lot of these digital businesses that will come. So just to put it in context, if you look at the top 100 market cap companies in India, which is about $2 trillion in market cap, only about 2% of that would be digital businesses or consumer tech businesses, if we have to say. Compare that to US and China, which is more than 30% of their top 100 market cap companies. So over the next decade, obviously, and Also, to put this a layer of context, just to make sure people understand that out of the total market cap of India, only 40% of that are B2C businesses. But we are a consumption driven economy, which is 60% of our economy is consumption driven. So clearly, there is 20% of businesses lying in the private space waiting to come into the listed markets. So for us as investors who invest in the listed space, it's imperative that we actually deep dive and understand these digital businesses, because the share of this in the indexes would probably creep up to 13 to 15% over the next 5 to 6 years. And we shouldn't be caught behind in looking at these businesses. So from the sectors that you mentioned, any digital business, whether it's digital lending, payments, food services, e-commerce, these are all businesses that we're excited to look at and one should actually see.
And when you're talking about it from an outside perspective, in the next 10 years, do you expect local companies that are public to be the ones, call it, acquiring those private companies that are providing the technology or the entrepreneurism to create those digital services? Or are you expecting companies outside of India to be the ones coming in either with existing technology or scooping up those companies? How do you see that playing out?
I actually feel that it's the unlisted, the private companies who will come to the public markets. And more of the Indian grown private companies in the technology space. So India being an open economy, I mean, we've had all the big tech giants come and operate in India. So we have the Googles and the Facebooks and the Apples of the world and the Amazons actually operating in India. So our technology companies, homegrown, have been competing with the global giants for the last decade. And in a sense, that gives some, as an investor, when we look at the homegrown Indian companies in the technology space actually able to outcompete some of these tech giants, it gives us even more enthusiasm to see what are the Indian consumers doing to actually go and use these services.
So how do you keep abreast of what they're doing as a public market investor? How do you keep tabs on it, whether on the offerings or the technological advances or the strategy to these private companies coming public, so that as a public company investor, you're ready, right? And you're not kind of waiting to the IPO to try to figure out what they're doing.
No, you're absolutely right. And considering that our backgrounds have been for the past 2 decades looking at not only public companies, but private companies in the space, we do, even when we are evaluating our public companies, we are looking at who are the private players who are competing with these public companies. It just gives us a better holistic understanding of the industry dynamics from competition perspective and any disruptions that may be happening. So in that context, even as a consumer, since we have the privilege of evaluating consumer businesses, it's easy for us to see where are we as a consumer also shifting our loyalties, maybe from an offline traditional business to an online tech business. So from on ground analysis that we do, it becomes a little bit more interesting for us to see these private businesses as well and be prepared when they do come to the public markets.
And in terms of the public markets right now, when you're looking out over the coming year, how does the macroeconomic factors globally matter to you? Is it more India-based? How do you think about where the world is in terms of growth and inflation that's impacting your portfolio and your decisions?
No, you're absolutely right. I mean, we have to always keep one eye on what's happening globally. But to also give some perspective, I mean, because our fund is focused more on domestic oriented businesses, global impact is in a sense has an impact on more about foreign fund flows, for instance. rather than so much about how these businesses operate. Also, in the current context where inflation is high in a lot of the developed markets and some developing markets, India has been experiencing inflation, which is not its peak inflation that we saw even a decade ago, which was at 10%. Our inflation is around 6%. So, in that context, wherein the rest of the world is maybe saying 30 to 40 years of peak inflation rates happening currently, India is not seeing that. So, our consumers actually are, domestic consumers actually are prodding along, if I may say, despite the whole global inflation conversation that's going around.
And when you look at the public companies, one of the interesting things that you said is that you're looking at what they're doing and saying, okay, for these private companies that are growing and coming up, how's it going to affect their business? So are they kind of asleep at the wheel, or are they also innovating and going to be competing? Why aren't they the ones investing in the technology to be able to capture this big digital growth?
You're absolutely right. I mean, that's what we always, try to stress test our businesses that are in the public markets that are traditionally not known to be, digital first businesses. And so, as a as an investment strategy, if I may, besides looking at B2C companies, the two things that we also have as parameters to as a strategy is that we look at businesses that have durable competitive advantages. Now, those could be across production advantages or network effects or brands or switching cost, and also being owner operators, in a sense that a management that is ethical, that is agile, and understands the disruptions that may be happening in their industry, and being proactive about how to fine tune their business models to address these disruptions. So clearly, we like those businesses that are actually looking at how to imbibe some of this digitization cycle that is happening in the country. And as we're clearly very conscious of the fact that if management is not addressing some of these issues, their businesses will actually cease to exist in a decade's time.
And one of the things I like to learn from great investors, Rakhi, is how they define risk. So it'd be great to hear how you define risk in your investments, and then how do you incorporate risk management, whether in your portfolio construction or security selection?
No, it's a great question, and it's an important question to ask, because we live in a world which is constantly changing and highly disruptive, right? So, in that context, what are the types of businesses and how are they managing their growth story? From a risk perspective, there are three things that we essentially evaluate. Since we are a fundamental bottoms up approach in terms of building our portfolio, as I earlier alluded to, I mean, we are looking at businesses which have strong competitive advantages. Essentially, in times of stress, they will be able to they have pricing power, and so can pass on any kind of cost pressures to consumers who are using their goods or services. So in that sense, we focus a lot on how, when we're looking at our portfolio, do we have a balance between competitive advantages or businesses that we have around those advantages. Secondly, what we look at is in terms of sectoral dispersion, or what we call the 3 or 4 buckets of the B2C space. If I had to deep dive a little bit into the B2C space, you would have businesses that are in staples, which are FMCG type of businesses, or you would have discretionary. So anything that you and I as a individual or household would buy, from all the way from footwear to buying a car. And the third bucket would be businesses that are in services. So for instance, healthcare, financial services, and the fourth being these new age digital consumer tech type of businesses. So we try to balance out our portfolio across businesses so that since their drivers are different, whether it's maybe urban centric or rural centric, to kind of brace those disruptions that may happen in the economy at different phases in time. Then also we are sector market cap agnostic. So we love to look at large, mid, and small types of businesses. And we fine tune our position sizing when we see that, businesses may have run up too much and are putting the portfolio at risk in terms of weightage. So these are the different various ways that we look at risk. We obviously don't apply leverage to our portfolio. So we kind of control that risk that may come from leverage.
And the other question I love to ask folks is, what is one of the greatest lessons you've learned in your career? Because obviously, you've been junior at one point in your career, and then now you can look back and have a whole lot of lessons. But for folks listening, what is something that you could share that you're like, okay, this was really defining for me, and something that either sticks with me or I learned from a mistake, whatever it is, that you would say is a big lesson for you?
I think if you see my career path, I wasn't a fund manager from day one. I've actually fallen into this role over the last 7 years because I finally discovered what I love to do in terms of deep diving and doing research and understanding what ticks as a business. So my biggest lesson over the years has been just to take each and every experience and learn from it, and understand what worked and what didn't work, and go even till date. I mean, the biggest thing that keeps me going day to day is, what did I learn today? What can I learn tomorrow? And that is the biggest driving force behind how I have seen my career build out, and what keeps me excited on a day-to-day basis.
Well, Rakhi, I think that is something that for anybody who loves investing, you have to have that, right? A love of learning, because every day you're learning, you're making mistakes, you're getting lucky, you're getting unlucky. So being able to sift through that and understand what is your process, where are you headed, and getting excited about that just takes a lot of fortitude. But for those who like doing it, it's so rewarding. So it's really exciting to hear what your lesson was and how you've been applying it. But last but not least, Rakhi, how can folks find you? Whether to keep abreast of the investments that you're making or your career, just getting in touch with you from their own perspective, how can people reach out to you?
So I'm on LinkedIn. I do post some of the stuff that I do periodically on LinkedIn. So it's you can search me up as Rakhi Prasad or Alder Capital. One can find that. I do occasionally come on Bloomberg and share my views. So as a part of their Markets Asia program. But yeah, otherwise, email me, Rakhi, Rakhi, at aldercapital.in. And I'll be happy to, connect and take discussions forward.
Amazing. Thank you so much. We look forward to following your career and your investments and staying in touch.
Thank you so much for this opportunity. It was a pleasure speaking to you, Nadine.
Same with you, Rakhi.